Here in this video, we're going to be going over the 3 things that are going to move the markets this week and Tesla stock. Number 1, you know it's the Israel conflict. If this does escalate and has potential implications for oil, that would be very bad for markets like we seen on Friday. We've covered this topic in the video extensively earlier, so we're not going to do that as much here in this video. I'm actually quite bullish on Tesla this week as long as the latter does not get worse. We are also going to cover the economic calendar, the economic data. That is going to be something that will play a role this week, as well as the earnings outlook. Now, a 4th thing that is going to move the markets this week are Fed speakers, and we do have a speech from Fed Jerome Powell, the #1 guy of all. So we're going to get into all of that. On top of it, I want to go over, again, some of the hedges I have on my portfolio, explain why I think right now is potentially a good time to hedge. I'm not a financial advisor. I'm not a financial planner, but there are a lot of risks out there. Don't copy my trades, but something similar, well, it might not be a terrible idea. Contact your financial advisor if you have one, if you are curious or don't understand how hedging works. If you guys would like to come trade with us live in real time, we can break it down and explain it for you. Link down below in the description of this video. I send out all of my trades in real time. You can come join the action over there. Again, those are not financial, recommendations, but you can get a little bit more knowledge over there, a little bit more in depth in the conversation. If you'd like to join, link down below in the description of this video. But I also, and I'm really excited for this, to go over how I plan to trade Tesla this week following earnings. I do want upside exposure here. I have a very specific strategy I like to employ before earnings. And this strategy has made me a lot of money in the past, so I want to share it with you here in this video. So hit the like button if you own Tesla stock, if you're excited about Tesla earnings, or you just like the markets. Maybe you like me. Who knows? Hit the like button. It's free 99, and subscribe to the channel if you want to stay up to date with this information each and every single day. The second thing I want to acknowledge before we jump into this video is, you notice the change of scenery here? No, I'm not homeless. I'm not sleeping on people's couches like some people, have reached out and asked, and I appreciate all of the love. I love you guys, so I'm thankful for those questions. But this is actually my mom's house, and I'm just buying rentals in this area, so I'm staying here I've been here the last 2 days. I've just been doing floors and carpet, things like that. We'll be back later on tonight in the studio, my house currently, but I just don't buy rentals where I live. I like the value proposition here a little bit more, so that's just what that's about. Again, if you guys are interested in even something like rental properties, you can come join the trading community as well. You can come ask questions, get involved with that over there. So the first thing I want to get into is, you guys already know what happened with this Israel conflict. If you guys have not seen the last video, definitely check it out. A quick recap: the U.S. sent another aircraft carrier strike group. We did send about 2,000 Marines closer to the Israel border. This is probably going to create a lot of uncertainty this week as the situation does worsen. Iran has came out and made a couple of threats over this weekend, including, quote, we could see what they say, ricocheting consequences or far-reaching consequences or something along those lines. I don't think I have it pulled up in one of my 50 tabs here, but that's basically what they said. This probably has a direct correlation to energy. There is 20 to 30% of the world's supply that flows through Iran's water space. They could choke that off, restrict that, and that would obviously be a big problem for us. Potentially get Fed rate cuts, potentially have a problem on our hands as far as a recession. We talked about that a lot in the last video, so I don't want to go into that too much, but you guys got to remember this and keep this in the back of your minds. No matter what I say, no matter how bullish I am, no matter what the data looks like this week, this will take precedence if we do see something with energy take place, or we do see this conflict start to actually involve U.S. military infrastructure. That would take precedence over anything else for this week. Now, you also have Iran that says, quote, Iran will not remain an observer in this situation and has informed Israel via its allies if its crimes in Gaza continue tomorrow will be too late. I don't know exactly what this means, but it's getting closer to that involvement stage. So not exactly the greatest thing to hear, but it's hard to draw any conclusions on what this could actually mean. And again, like I say all the time, the markets can handle bad news. They can't handle uncertainty. And all of this sounds like a lot of uncertainty. So just be on the lookout for any escalation with this conflict. Oh, and I forgot to mention, someone just took a huge stake in Tesla when they didn't own any Tesla before. This is about a $200 million position, almost 2% of their entire portfolio that they added in the last quarter. This is making some headlines. You guys might hear about it, you might not. If you're a subscriber and you watch these videos, you're going to hear about that here in this video as well. But I do want to start getting into some of the data that's going to be coming out this week, as well as the Fed speakers. So starting off on Monday, you're not going to have much. You're only going to have Fed Harker that speaks at 10:30 a.m. But then on Tuesday, it's going to get a little bit more action-packed. You do have the inflation rate coming out of Canada year over year at 8:30 in the morning. This is highlighted in red. So anything you see highlighted in red has the potential to be volatile for the markets. So Trading Economics thinks that could be volatile. I personally don't. I think unless there was some big move lower or big move higher, in which you can't forecast that. The probability of that is very low. So I'm going to sit here and say that's probably not going to be impactful to our markets. Now at 8:30 in the morning, retail sales most definitely will be impactful. If you guys are unfamiliar, about 70% of GDP for the US revolves around consumer consumption, consumer spending. So retail sales month over month is a big data point. And if we actually pull up this chart from other, retail sales numbers that we have gotten over the past year, you can see the lows of 2022, October, November, September, that 3-month area was pretty rough for the markets. Well, October, you did have positive retail sales about 1%, but November, you were negative 1.3%. December, you were even negative 0.7%. So this did have some role to play in some of those recession fears we did see in 2022 towards the end of the year, once the markets did, hit their bottom. Now, retail sales, we are expecting 0.3%. Last month's number was 0.6%. So we are expecting a slowdown here with retail sales, but still being in positive territory. And then you're going to get a lot of other secondary data in regards to this: capacity utilization, manufacturing production year over year, month over month. The red book, retail sales year over year, retail sales excluding gas and autos. All of this other data, it's not going to matter as much just compared to the headline retail sales number. Now, sometimes secondary data points can make the markets a little bit more bullish or a little bit more, negative, just depending on what this headline number is. But these secondary data points, whether they are really good or really bad, it's not going to be more impactful, if you will, compared to the headline retail sales number. So definitely be on the lookout for that. At 9:20 a.m. on Tuesday, you're going to have Fed Bowman. Fed Harker speaks at 10:45 p.m. And then you're going to get a lot of Chinese data coming out Tuesday night. So at 10 o'clock at night, Eastern Standard Time, you're going to get the GDP growth rate year over year, industrial production year over year, retail sales, and fixed asset investment, as well as the GDP growth rate, the unemployment rate, industrial capacity utilization. So a lot of Chinese data that's going to come out. We have seen Chinese data have an effect on our markets when it comes in really good or really bad, but I'm not convinced this week the markets are going to care all too much about what's going on over in China. I think there's bigger fish to fry. Now, Wednesday overnight, Trading Economics thinks the inflation rate out of the UK will be an important catalyst. That comes out at 2 o'clock in the morning on Wednesday. I'm not convinced. Again, I think just to the core principle, the U.S. economic data, the Israel war, the Fed, and earnings are going to be the only things that matter, okay? And specifically the Israel conflict and earnings are probably going to be the two big things that really move the markets, unless data comes in really good or really bad. That's what's going to move the markets. Fed speakers as well. We do have a lot of Fed speakers, as we're going to go over here in just a second. Thursday and Friday, you do have a lot of Fed speakers. So even on Wednesday, I mean, you're going to have Fed Waller that speaks at noon, Fed Williams that speaks at 12:30, Fed Bowman that speaks at 1 p.m., Fed Harker that speaks at 3:15 p.m. The Fed Beige Book comes out at 2 p.m. as well. This is basically a summary of how all of the districts are doing. So you definitely want to be watching that as well. That does actually move the market, so I'm surprised it's not highlighted in red as a, volatility catalyst. You also want to watch the 20-year bond auction. So what we seen on Thursday was nobody showed up for the 30-year bond auction. There was literally 0 bids at the Fed for 30-year treasuries. That sent yields much higher. That sent stocks way lower. And then on Friday, it was the complete opposite. Investors were buying bonds, they were buying gold. And in fact, for anyone that does not know why I think this situation is not over, why I think the downside in the markets potentially is not over, GLD gold was up about 3.5% on Friday. This was the highest green day or up day for gold you have seen since March 23rd, 2020. When gold was up 4.5%, and the following day, March 24th, when gold was up almost 5%. It's been almost 4 years since you have seen an over 3% up day on gold, and you were up 3.5% on Friday. So there was a lot of fear on Friday. Just remember that. Keep that in mind. Now, on Thursday, you are going to get Philly Fed business conditions. This will be important. This Philly Fed data, Philly Fed business conditions, Philly Fed CapEx index, Philly Fed employment, Philly Fed new orders, Philly Fed prices paid, especially prices paid will be important. You want to see prices paid come in as weak as possible because that's directly related to inflation. Higher this number is, potentially the worse implications it has for inflation. You're also going to get existing home sales coming out at 10 o'clock in the morning on Thursday. Month over month, you're expecting negative 3.5%, really seeing some downside pressure there. And then existing home sales to come in at 3.89 million. Last month's number was 4.04 million. So a lot less houses potentially on the markets. Fed Jefferson, I shouldn't leave that out, speaks at 9 p.m. or 9 a.m. On Thursday as well. The big kind of catalyst for this week, it looks like it's going to be Thursday at noon. You're going to get a speech from Fed Jerome Powell. So if there's any change there, if there's any change of tone, that could be important. Now, at 1:30 p.m. on Thursday, Fed Goolsbee. Again, 1:30 p.m. on Thursday, Fed Barr. Fed Bostic at 4 p.m., Fed Harker at 5:30 p.m., and Fed Logan at 7 p.m. A lot of Fed speakers this week, guys. So any Fed change in tone will be important. Again, what that really means is if Fed members come out and say, yeah, we might need to raise rates again. Well, that's not going to be good. What we've seen recently is the Fed has by and large been unanimous that they've probably done enough. They could probably wait and see what happens. If they start to get into the camp of like, yeah, the economy is slowing more than what we think, Israel, this war, the potential implications of oil, we just don't know. If they start to spark a lot more uncertainty or potentially even give the markets bad vibes, let's just call it that, bad vibes, stocks might not like that. Okay, and it's going to be up in the wind to see how they react to it. On Friday, you're going to get retail sales out of the UK at 2 o'clock in the morning. This is probably going to be the most important data point from foreign entities this week besides the Chinese data, because if Europe goes into an even deeper recession, then the U.S. is probably not going to be able to avoid a recession. Who knows how deep it would be? There's a lot of potential outcomes here in the next 6 to 12 months or so. But if you get bad UK data, bad China data, I'll tell you right now, it's not going to be good, but it's not going to outweigh the Israel war, Fed speakers, U.S. economic data, or earnings. Now, to my pleasant surprise, you actually have the futures up right now. The Nasdaq up 0.17%, S&P up 0.12%, Dow up 0.11%. I think a lot of this does have to do with bond yields falling on Friday and the algorithms that trade these futures just, buying the futures, trading futures higher based on that, when in all reality, this could change quickly. So futures right now look decent, but take this with a big grain of salt. I think the biggest thing we need to be watching is new developments in this Israel war. If you take a look right here on screen, you can see it is about 1:50 p.m. to almost 2 in the morning over there in the Gaza Strip. These are live, feeds. So once we get to early morning, we're probably going to get more details, more updates, more good or bad news. That's probably what is going to help drive the markets coming tomorrow. So there's not too much actually happening over here right now. Something you want to be watching overnight tonight and tomorrow morning. Now let's get into this weird, exciting news. So this fund, Menorah Mifstim, I don't know why these names have to be so crazy on Wall Street. The Menorah Fund. Okay, that makes a lot more sense to me. They have assets under management of almost $11 billion. Take a look at their top increases this quarter. So the number one is they bought 1.86 million shares of SPDR oil and gas exploration and production ETF. Makes you wonder if they think oil is going to keep going higher. They must, right? If they just put $239 million into this within the last quarter. The second largest increase was actually a brand new position for them. They bought about 770,000 shares of Tesla worth almost $201 million. And they put 1.85% of their entire portfolio in Tesla. So if you look here, their biggest, stock is Microsoft. Their second biggest is Apple. Their third biggest is Google, AMAP, MasterCard, XLV, Meta, Amazon, XLF. That one. And then down here you have Tesla. Now, why I think this is very significant, Microsoft, Apple, Google, none of these guys really matter because there's something called your beta and your alpha. So your beta is, imagine it like this. If you're a hedge fund or institution and the NASDAQ or S&P goes up 30% a year and your portfolio goes up 10% a year, you're going to lose clients. Okay, they're not going to be happy. So you have to have a beta that is similar to the market. So you have to be similar weighted to the S&P or the NASDAQ if you want to retain clients, if you want to at least track the S&P at the very minimum. The alpha is a smaller portion of your portfolio that can give you outsized returns. A Microsoft or an Apple, it's not going to, 5x all too often in a year, right? Or 2x in a year. But a Tesla can. So your beta follows the markets. Your alpha, think about it like outperform the markets. That's where you get those outsized returns, where maybe if the NASDAQ's up 30%, your fund's up 40% or 45 or 50%. That's coming from the alpha. It's not coming from the beta. It's not coming from your stocks that track the S&P or the NASDAQ. Hopefully that makes some sense. I think that's the easiest way to explain it. So when you see a brand new position of $201 million, and they never owned a position in Tesla before, that is pretty significant. About 2% of their entire portfolio was just put in Tesla right before earnings. Not after earnings, before earnings. And if you do take a look at the 13F filings over here for Tesla specifically, we are seeing quite a few big positions being added to and just being bought. Granite Bay Wealth Management just increased their position in Tesla by about 5,000%, now owning about 79,000 shares. This fund increased their position by 68% within the last quarter, 26% here, 26% here, or 64% there. You do have a call position being up by 102%. You are getting a lot of bullish activity if you just look at the snapshot here of inflows and outflows. Last quarter does look like a net inflow for Tesla, but all things considered, since last quarter, the stock has dropped quite a bit, but you really haven't seen the invested capital in Tesla actually fall. This does show a decent degree of confidence for Tesla heading into this next earnings season. Now, as I pointed out in the last video, I am bullish on Tesla earnings. I'm not so bullish on the broader markets. I don't know how this conflict is going to play out. I don't know how the data is going to come out. I don't know what the Fed speakers are going to try to convey to the markets. Some of these things you just don't know until they happen. If you look at Tesla specifically, you have a lot more call activity than put activity. The calls are dominating the option chain expiring October 20th. So by this week. And you could see on Friday, the call volume was almost 67%. The put volume was 33%. There was a lot of people, even on a really red day for Tesla, buying themselves a lot of calls. Remember, Tesla is down 3% on Friday. You should see a lot more puts being bought on Tesla than calls that were bought. This is a really good sign heading into Tesla earnings on Wednesday. And again, I've already talked about this a little bit, but Tesla stock, what you really need to know as an investor heading into Tesla earnings, EPS doesn't matter. Margins don't matter. Revenue does not matter. Free cash flow does not matter. As long as they come in line with estimates, obviously, if you get a big drop or big beat, it's going to have some kind of bullish or bearish effect. But the thing that is really going to move Tesla is the forward-looking guidance. Now, a couple different things to know there. Forward-looking guidance is one thing. Tesla's probably going to reiterate 1.8 million deliveries. They're setting their bar a little bit lower so they can exceed that by a little bit at the bare minimum in Q3. Probably not going to get a huge change there. But the Cybertruck is something I think really gives you that alpha, if you will, considering we were just talking about that could give you a big outsized upward move or potentially downside move. Worst case scenario, I think, for Tesla stock this week is a 5-10% down move after earnings, probably around 5%, if we got zero news about the Cybertruck. Zero new updates, zero nothing on the Cybertruck. Because that's what the markets want to see right now. The markets want to see a delivery date for the Cybertruck. They want to see a delivery event for the Cybertruck. And they preferably want to see, production estimates for 2022 now that we've seen like castings for the Cybertruck starting to pile up outside of Giga Texas. What do they think their capacity is going to look like? If Tesla cannot tell us what their production capacity is going to look like after we have seen hundreds of Cybertruck Giga castings outside Giga Texas, that's not going to look good. Okay, even if it is good, even if we're going to hear a really good number down the line, markets are not going to take that initially as bullish. Now, hopefully the stock does fall, but if we do get production targets, delivery targets for 2024 for the Cybertruck, which I do think there's a decent chance we will, probably a coin toss if they go out and actually give us some forward-looking guidance on the Cybertruck, that causes Tesla stock, in my opinion, to rally 10-20%. That could put Tesla stock on the higher end, 20%. And this is like the day after earnings, like 10-20% the day after earnings. It could continue from there. This would be like Thursday, would be my expectation. 20% would put you at like $301. Probably get a little bit of resistance around 300. And then ultimately, if you break out above 300, shorts are in a really, really bad spot. You guys got to remember as well, the situation looks pretty good for Tesla in 2024 relative to definitely your legacy automakers, but other stocks that are not growing as fast as a Tesla, that are much higher value than Tesla on a PEG ratio basis, Microsoft, Apple, Amazon, some of these other stocks are trading a lot more expensive than Tesla. Now, Tesla has done pretty well considering the Fed has raised rates from basically 0 to 5.5%, a majority of that happening towards the end of 2022 and the beginning of 2023. I mean, Tesla's still done decent. It's still trading at roughly where it was in 2022. Next year, if you're looking ahead, we're going to see rate cuts to some capacity or another, whether we get a lot, whether we only get a couple like the Fed is projecting. We're still going to get some rate cuts. That should help out demand and affordability for Teslas. That should cause investors to bullishly position into Tesla stock. If, as you know, fiscal year 2024 started on October 1st. So you're probably going to get a lot of positioning for 2024 after this earnings. That's why this earnings is a lot more important than last earnings. Now, my specific strategy that I like to use trading earnings is I like to go out like 25, 30 odd days after earnings. Somewhere in that time frame. You can do this on a, lower time frame, like a 2-week, 3-week time frame. But I find it's more effective to go out a little bit longer. Now, what typically happens heading into earnings is you get your IV run up. This is your implied volatility. For an example, on Monday, implied volatility might be, what are we looking at? 60, 70 right now for October 20th. I'm not even going to look at that expiration. I want to go out to something like November 10th here. The implied volatility is about 50%. Well, right before earnings, your implied volatility might be 65 or 70%. Long story short, that means as long as Tesla stock does not fall too much heading into earnings, it just stays pretty normal, like at the same price it's at right now. Maybe it goes up a little, goes down a little. It stays in that same range. A lot of the time, your calls and your puts will go up in value based on just the IV run up alone, as people are starting to make their bets. So you have to have some degree of confidence in the direction. Now, this would really, be helpful if this Israel conflict does not get worse and we don't have other negative events this week. But you can trade this way for the upside or the downside. But essentially, if you think Tesla stock is going to be bullish heading into earnings, you can, and what I'm planning on doing, going out and buying 5 to 10 of these options, maybe around the 315 strike, expiring November 10th. This was one that I might look at. I might buy 5 of these options or 10 of these options. I might spend $500 or $1,000. And once the IV hits, maybe these options go up. Maybe the 320s hit my price that I paid for the 315s of 103. Maybe these 320s go to 135 before earnings. I can go say, hey, I own the 315s. I can go sell the 320s, collect my initial investment back, turn those into a debit spread, and keep a couple of these options for free. That's the strategy I like to impose personally. You can do this to the same downside. It's called legging into a vertical spread. Maybe you guys can find better information than I can explain it, but it's basically buying an option for one price. And then when those options start to go up in value, if you're correct on the direction before earnings, your IV can help you out here. And the options that are further out the money, well, they might now be the price that you paid for your options. You can go sell, 5 or 10, whatever you want to do, and create a debit spread out of that. Get your money back and hold a free trade, essentially. That's what I'm saying here. Get your money back. That's number one. That's the strategy I like to use because you don't want to hold $500 or $1,000 of these Tesla options heading into earnings. The chance that you're going to make money is way too low to take that kind of risk unless you have a huge portfolio. Okay, so I like capital preservation more than anything else. So that is what I would potentially look for on the upside. I do think we're going to get an upside move after earnings. For the downside move, same exact concept. Maybe I would be looking at the 200 puts or the 195 puts. This could maybe be looked at as like a hedge as well. That's why I like to go out a month or so even after earnings, because if the markets deteriorate, whether they are other earnings that cause it or data or the Fed or anything else, if the stock moves down, but maybe doesn't move down enough for you to make money on your options, at least initially, a lot of the time that follow through over the next couple of weeks will send the stock down much lower. And it's kind of like a hedge against other things that can happen as well. That's why I like to get time on these options. And if you're wrong in that initial direction, maybe before earnings, I found it you can lose like 10%, 15%, 20% is pretty extreme to lose heading into earnings themselves. But $500, you could lose 100 heading into earnings. You sell out, you walk away at that point. That's essentially the strategy I like to impose. Let me know what kind of trades you are looking at. But I think the best ultimate trading strategy, investing strategy, is buy some here, buy some now, buy some later, buy some later after that, just to buy some stock. That's what I like to do. I'm not a financial advisor. I'm not a financial planner. None of this is a financial recommendation. About 87% of options expire worthless. So do not listen to me at all. You're going to lose money. But if you're someone that does trade options already, this is not a terrible strategy to potentially employ. Now, as far as some of the other hedges I have on my portfolio, these might be reduced, they might be added to it, just depends how the situation does escalate. I do specifically want to see when Israel does make their way into Gaza, if you actually do get some kind of pressure put on oil from Iran or Saudi Arabia, or how that Palestinian community does react. It could have big implications for our markets. Like I've said many times, index level QQQ, SPY could drop 20, 30, 40%, just depending on the severity of the actions taken from other nations, specifically Iran. They've made some really, ominous threats over the last 24, 48 hours or so. So I do definitely want to have some hedges on my portfolio. This is the one that I like quite a bit because it's pretty close to the money. The 350 put, I'm up about 45.5% on this trade currently. It's worth like $1,000 or so, but I do like the time. Obviously, I want to have November 10th, November 17th or later contracts here. I don't want anything in October. That's definitely for sure. And I want some time in November as well. By November 10th, November 17th, you're going to have all the data out the way. You're going to have this Israel conflict, a little bit more certainty there. You're going to have, I believe, the next Fed meeting, if I'm correct. The Fed meeting is on November 1st. So you're a little bit, hedging for that as well. And then you're also going to have your big tech earnings out the way. You're going to have Apple, you're going to have Microsoft, Google, all of those guys. Most of them report next week, so towards the end of October, and then Apple's in like the beginning of November. So it's more or less a hedge on this Israel conflict, but also can be seen as a hedge on many other things as well. And that's a big reason I want to be hedged in the near term as well as the longer term. Now, I do have the 340 puts as well. That's about 7% out the money to break even, going for about $208. I have 3 of those. I'm actually down on that position a little bit. I believe I'm down like 11%, 9%, 10%, something like that. Not a big deal at all. And then I do have some debit spreads in Apple. I think this is a really interesting trade with a interesting risk to reward proposition. You could make $20,000. They currently cost $320 for this trade. If Apple does fall to 140 or lower by November 17th, so a little bit of extra time there, that would cover all of the other events, Apple earnings, that would cover any escalation with this Israel conflict, but that is quite far out the money. That's a drop of about 21.67%, so it's far from guaranteed, but I think the risk reward makes a lot of sense, even to, sell out, get a couple contracts for free. Something like that could also make sense. I do have 40 of them, so if I'm up 100%, I would definitely probably sell out 20 of them, make my max a potential gain 10,000, reduce my risk on my capital itself down to 0 after I got my money back. So a couple different ways you could trade this year. I want to be bullish in Tesla. Hopefully we do get a bullish day or two. You can implement some of those strategies that I talked about, or at least I plan to implement those strategies that I talked about, because I do think the odds Tesla stock does go higher after earnings is a lot greater than Tesla goes lower. Even if you look at the shorts here, shorts are not exactly in the best position possible. About $21.67 billion worth of short positions currently on Tesla. Tesla has about 2.5% of the total short interest on the entire markets held in Tesla. So if Tesla does beat expectations, gives us really good news on the Cybertruck, at some point you're going to see shorts cover on those positions. You're going to see them in a really bad situation, especially heading into 2024. So that is basically going to do it for this video. Khaleesi, do you want to wrap us off? Yeah. Say thank you guys for tuning in. Yeah, she's tired. Thank you guys for tuning in. My name is Michael Tyler. Like I said, link down below in the description of this video if you guys want to join the trading community. That's basically it. Hit the like button, subscribe to the channel, all that good stuff. Free 99. My name is Michael Tyler. This is Khaleesi. We will see you in the next one.